Pete Nigerian joining us. Pete, what's up, man? Quite a session here.
I'm doing well, Oliver. This is fun, man. This is what the markets are all about, right? Not always going in the same direction, but giving you an opportunity to trade within that and all that. I mean, this is it's been a good trading day already.
We've hit obviously the kind of the normalization of the index vol. Stocks have been going all over the place. That's why we had so much fun trading a bunch of these stocks. But the index had been very peaceful. So the index vol pops. We talked about maybe some macro effects here with a nice industrial number yesterday for PMIs. Tell me what's top of your list, Pete, and kind of thinking about why the market's having this spasm.
Well, you know, I find it really curious about what's going on specifically in the crypto world. I think that space has gotten us into a position now where we're all kind of focused on it at least each and every morning, because it looked like we had bounced and we were starting to go back to the upside, and it's kind of failed, right? I mean, it not kind of failed, it has failed. And so I think that's a bit of a concern. I look at these metals, and when I look at yesterday and I'm watching the day as it's playing out, and we're looking at silver and we're looking at gold and everything, it is never going to be something where, and it's a great chart because it's never going to continue this run forever. At some point, you have to expect some of these pullbacks, right? And I think that's what we are seeing coming out of silver. And GLD, I would put as far as like how I oftentimes am measuring gold. I do that because of all the option activity that comes out of GLD. It's just absolutely magnificent. But, you know, yesterday, what was the one stock that really stood out for me when we were looking at the unusual option activity? It was when somebody came in and bought 55,000 of the 450 calls in GLD. Well, those were $7 at the time. You know where they are today? 1840. So It gives you a little bit of an idea of, you know, there's going to be some dips, there's going to be some fallbacks and everything else, but there's also going to be a little bit of a rise. And I think what we've watched today with silver, you know, it really got hit much harder than gold, and on that move to the downside. But even today with that, SLV, we started to see another run for that. A couple of thousand, you know, they bought 4,000 of the February 79s. They bought another 5,000 of the September 79s. And then you've got Pan American Silver, which is just a big, huge miner, does a little bit of everything, but silver is what a lot of folks kind of tag to them. Well, shoot, they bought 10,000 of the January 2027s, 10,000 of the January 2028s. And as I said, we had the SLV paper. So, you know what? People are still there and they still have an appetite. And if they have an appetite for this and they're willing to put that on the line, it makes me continue to watch very closely and continue to be a trader within.
Yeah. The category that these belong in now, Pete, after all this volatility, it seems hard to continue to call them safe haven assets. I think that's a good part of the reason how they got here. I think that gold in particular had such good performance across several different macro regimes. It withstood all of the crypto narrative. It withstood even when the Fed hiked. You know, it had a down year, but so did stocks. You know, but at this point, when you've got this amount of volatility, when you have this degree of options flows like you're talking about, maybe this applies even more so to silver than gold, but I feel like we have to categorize these as risk assets. I mean, you know, there's no earnings in gold, but there still is like a valuation to some extent. You know, like it gets murky, but
yeah, people are definitely willing to want to go over there as you know, quote unquote safe haven, but you know, there's more to it than that. I think the biggest thing that separates gold from silver for me is just the absolute usage that so many people are still not quite aware, I don't think, and I think you've done a good job. I'm hopefully doing a good job of spreading the word on silver. Why did silver outperform gold to basically double? I mean, if you go back to a year ago, you look at silver, it's up 163%. You look over at gold, and it's up 76% over the last year. So if that's the case, why is silver outpacing it so much? And I think the actual answer is, well, look at how much is used for AI. I mean, silver is an absolute for that. Look at some of the most important chips that NVIDIA puts out there, the high-performance chips. They need silver. You look at data centers. You look at medicine. You look at photography. You look at all these things, the EV batteries. So there is so much usage for this, and I think I can use it as a bit of a, you know, something that shows you a little bit about this. If we're sitting there looking and talking so much about AI and hearing so much about names like Micron in terms of the memory, and SanDisk in terms of the memory, and all the different pieces of that puzzle that we've got. I know one thing for sure. I remember Micron coming out and saying, look, we cannot keep up with demand. It's just a fact. We can't keep up with it. Well, if that's the case, that's actually probably pretty damn good for silver as well.
Yeah, I hear that. I think it's a very good point. I think there are still lots of AI knock-on effects in this market that are underappreciated. To Brent's point, the cloud companies getting obliterated on AI disruption, people being able to code on their own, such an important story. Maybe it's also in the Bitcoin story too, the quantum threat to a new computing basically, and the ability to maybe crack crypto codes or whatever. So to your point, there's an AI impact almost everywhere, and to think it's not in silver, I think would indeed be missing the picture. The other thing too, yeah, go ahead, Pete.
I was just going to add one more thing to that, and just talking about those memory stocks.
Yeah.
Not everything goes straight up, and we talked about that with silver and gold both. But the amazing thing is, it makes some sense that you're going to see some pullbacks. Something's a little bit too far in front of itself. I'll give you a great example. These memory stocks that I brought up. Mm-hmm. Micron's up 48% year to date. Not
looking at
over
it right
the
now.
last year to date. 48%. SanDisk is up 180%. Western Digital's up 64%. Seagate's
Crazy.
up 50%. So, and I'm talking about January and now the second day into February, right? So,
yeah.
Let's just say that things are not going to go parabolic. They're going to pull back for all the right reasons at times. They're going to get a little bit too lofty, and then they'll come back and they'll be starting to buy again. But I find this really, really intriguing of what we're seeing here as it's playing out, and I think it makes some sense. If you and I had bought Micron together or SanDisk together, for goodness sakes, at 180%, I probably would have tapped over to you and said, hey, it might be a good time for us to lighten up a little bit.
Take a little bit. Totally.
So I think
I'm with you.
We're not the only ones who think like that.
Yeah. Well, I'm looking at the chart for STX as an example, and to your point, this is actually exactly where I was going to go, is these charts look pretty solid. I think still by most standards, you're kind of giving like a little bit of an ascending triangle, maybe a wedge, something that I think generally often more breaks upward than downward when you have the type of momentum behind it, and then you go through a period of consolidation, which is what I would describe these charts as right now. Micron, we put in a slightly lower high, but I don't think anything here in these charts suggests major breakdown. The semiconductor ETF SMH resemble this to some extent, but it does have a few days of lower highs and lower lows behind it. But the broader group is going to be a little bit weaker than the stuff that's been super duper hot, which gets to the SanDisk, which gets to the STX. I mean, look at SNDK today. No problem at all. It's just moving anyway. It's still up.
Which is amazing, isn't it? And that's the one that's up the most. So it just shows you that is it nonsensical to some degree? Sure. But we never know when those pullbacks are going to come. And that's why it's interesting to see where does the unusual option activity. You're sitting right there at the CBOE Global Markets. Let me tell you, if I saw the paper coming in like I have seen today, for instance, yesterday was GLD, today was a lot more on the silver side, that's going to give me the influence of what direction I think it's going to go from here, because they're coming down, on a day like this where you've had that pullback, and now all of a sudden the buyers start to come back in, and you start to see a pretty good lift out of something like silver.
Yeah. All right. Well, they're still willing to go into it after a 30% intraday drop, so that tells you persistence. Speaking of persistence, we got a big event coming up on the weekend. One last gamble, I think, until I got to change the animation from a football to something else. I don't know, but the American flag is staying, that's for sure. Let's look at Kalshi and let's look at the numbers here. You were all over Seattle as the leading contender, since we started this show, basically. Give me a 60-second thought on the Super Bowl and what you like here, Pete. Right now, Kalshi's got Seattle at 68%.
Yeah. It makes a lot of sense to me. If you look at what's happened in the offseason, or not the offseason, but the playoffs, you look at Seattle, you look at how the quarterbacks played. Drake May had a little bit of pressure on him. He didn't play as well as he did during the season, but they still won the games, which is the most important part. Seattle, a little bit different story. You take a look at what Sam Darnold was able to do. He did an outstanding job, and in the playoffs, even better. So I think because of what he looks like right now and because of that defense that Seattle has that I think is a suffocating defense, I put them up there with some of the best defenses. I don't know that they're as good as the Bears, but I think that they're as good as the Ravens and some of the other teams over the past that have gone into the Super Bowl. Defenses do help you win Super Bowl. And I think that if you look at the two of them, I think the standout is absolutely Seattle. They're very, very impressive in everything that they're doing. Great receivers, great running backs, two of them. And I think that's why they're probably sitting in this great spot. It doesn't mean that New England can't have a shot, and I think they could. But it certainly seems to me that I lean very heavy, and I obviously see it in front of me as well, but lean heavy towards Seattle. The one thing is they're going to lose their offensive coordinator once the season's over. And is that going to have an effect this week as they get in closer and closer to the Super Bowl? Because their offensive coordinator is pretty much a slam dunk to go to the Las Vegas Raiders. So
Interesting.
Is that going to be a little bit of a something
in the back of their mind?
In the way of anything of right? Yep.
A little distraction. Yeah, not good to have distractions at the table. Great stuff, Pete. By the way, shout out, nice call. I'm pretty sure the first time we did this segment and I asked you about NFL for the year, you said Seattle looked like the best. So you know your stuff. All right, we're learning from the best. Appreciate it, Pete and Jerry. Fun convo.
Thanks, man.
Good look at the semiconductors that are winning alongside the metals as well. Pete and Jerry and Market Rebellion. All right, 2-minute